Hey there, everybody. Welcome back to another episode of the Build Your Copywriting Business podcast. Hey there, Kate.
Hello, hello.
Hello. Okay, so today, actually, I really think Kate's going to lead the conversation here because she has always been much more conscientious about this topic than I have. I have not been sloppy, but she's just been much more conscientious about it. We're talking about finances, personal finances, when it comes to your freelance clients and freelance businesses. I have always been good about tracking my numbers, what invoices are out there, what invoices I'm waiting on, what I have transferred for
Paying your
taxes.
taxes. Yeah.
Yup. But that's really the tip of the iceberg. And the things that we're going to talk about today are not difficult by any means, but can be really, really beneficial for understanding what clients are I don't want to say worth working with because they're all worth working with, but what clients are bringing in more of your income and all kinds of exciting things. So, Kate, where do you think we should start when it comes to this topic?
Let's start. I think, well, tis the season if you're listening to this when it comes out. If you're not, it's fine. Any time is good to review your financials, and you should be doing it. Honestly, do a check-ins, put it on your calendar right now. Step one, put in quarterly check-ins for yourself, especially if you're freelance. You've got to pay quarterly taxes. So put those check-ins on your calendar and then continuously review it throughout the year. Honestly, though, I would look at it monthly, just once a month. That's what I do. I kind of, when I'm invoicing, is when I take the time to also just take a high level look at what's going on with my finances and what clients, obviously I'm sending out invoices for what clients owe me, but also kind of then taking, as the year goes on, a bigger look at month over month, what that looks like. So schedule time on your calendar, definitely quarterly for a bigger look back, monthly with your invoicing if that's something you feel compelled to do as well. And I would recommend it.
And so when you say monthly, are you saying you check in every month to see what invoices you've sent out, what invoices you're still waiting on, what you have transferred to your tax account, all of that kind of thing? Is there anything else that you
Everything. Yeah.
check?
That's a good question. I should bring up my spreadsheet. So I have a spreadsheet, and I recommend, CCA students know it basically looks very much the same of invoice tracking. I think I added, I have one client that still sends a check. So I added a column of like when I receive the check versus when it goes through on my bank statement that it actually processes, just to make sure that it's cleared. And so I break it down. I have each client in its own kind of section, if you will, because I have a lot of recurring work with the same clients. Sometimes there's a one-off project, and they're in there too, obviously. But then I can take a look by each client, and this is really the key I find for me, to be able to look at, okay, over the course of 12 months or 6 months or a quarter, what does this picture look like with this client? What is it consistent month over month? But also then weighing, and you can put a column in your spreadsheet, your invoice tracking, if you want. And I have a notes column, if you will, to remind myself of what went on with certain projects that month. How much energy did it take for me to work with this client? Because I have one client in particular, so easy to work with, and it's such a pleasure. It doesn't feel like work. And so I make those notes. There was nothing out of the ordinary. This was, standard month, carry on. They're not my highest paying client. I've talked about them before, but I'm going to keep them on my roster because it's enjoyable. It's fun work. And that's why we do our work, right? But then there's clients where it's enjoyable, but there can be headaches, there can be hiccups, there can be extra work that came down the pipe that wasn't necessarily planned for. And so by taking notes each month, I can, the next month, if I'm quoting a project, say, oh yeah, the past 3 months, every project has involved a little more than maybe my project pricing accounted for, or just a little more energy and more of a brain energy suck. Maybe there's more of a higher level of stress. And so to account for that in my pricing, that I know that there's going to be more time spent with this client. And then go ahead.
I was going to say, do you ever write down never again in your notes column?
That's where I was going. Yeah. So I think not never again, but I think there becomes a clearer picture. For me, there was one client, this was a couple of years ago, where I'd worked with them for several years, and I just started to realize, like, looking back, it was like nothing has changed. We've tried, and I've, before letting go of a client, we'll link to that episode of how to let go of a client. I communicated with them, here's what I really need to be able to do my job well. And for them, it was a timing issue. Their sales team sold the project to a client, and then I was like, here, go. And it was very, very rapid fire. The sales team was over promising the end client of how quickly the creative team could. These were website builds from start to finish. So copy and design being at the front end of that, and they still need to then build the website and get it live and launch it. So the timing of these projects was always crunched, and copy would be like 30-page website in a week, go. And it was like, yeah, no, that's it's not going to happen. And I tried to be flexible, and it wouldn't happen in a week, but hey, what can we do to get the ball rolling and start feeding pages to the developer, whatever. But there was still that level of like, loved the team I worked with, loved the creative team, but it just became not worth it. And I think it's very easy at the end of a project to be like, oh, okay, that wasn't so bad, and like I got paid for it, and like you forget what's happening in those feelings in the middle of the project. So I like to have it next to my numbers, because the numbers don't tell the full project story. I want to know where my energy is going and what actually, oh yeah, I kind of forgot that was a terrible project to work on. And there were, not just working hours, I work off hours anyway, but hours I didn't want to work that I ended up working because things just got chaotic.
Mm-hmm.
And so for that one, it became, yeah, okay, if I'm being honest and looking at all of my notes and what really happened, it's time to let them go. And so it became, okay, they're paying well, not well enough for the toll it's taking on me mentally, emotionally.
Mm-hmm. Well, and I think, people might be thinking like, if you worked with a client and it was crummy, you will remember, but not necessarily, especially if you do
Not
work with a
necessarily.
client and then you work with a bunch of other clients in between. And then this client comes back to you, or, there's some clients that you work with and then they come back a year later looking for more projects.
Yes.
And there are definitely clients
Yeah.
that have been like, oh yeah, I think I liked working with her, so I'll take it on. And then you finish the project.
And then you remember.
Exactly. Or in my case, I finished the project and sent through the invoice. And then I was like, why do I remember there's something with the invoice? She took forever to pay invoices. She would obviously, she would pay, but I would have to like remind her and remind her and remind her, which of course I could have, I suppose, factored that into the cost of but I didn't, because I didn't remember, because I didn't make that note. Yeah.
Yep. Yeah. Making notes. It's a game changer, especially, frankly, if it's a big project and you see like a $10,000 note in your spreadsheet, you're like, oh yeah, that was awesome. Oh, wait, no, it wasn't. That $10,000 maybe was spread out over a longer period of time. And was it truly $10,000? And even if it was $10,000 worth of your time, was it worth that much of your energy?
Mm-hmm.
And the answer can be no. And I think it's easier when you see those things side by side than when you just see the number and you're like, oh yeah, I want to hit that number again. And you can, just with a client that is more pleasurable to work with than the ones that drive you up a wall.
Mm-hmm. Yeah, I love that notes idea. It would have saved me a lot of misery.
It's easy to forget. I mean, we have so much going on. So like the more that you can write down and then be able to reflect on during your financial meetings with yourself, the better. The other thing with that is too, I look at, again, my lowest paying client, who's the most fun to work with, over the course of a year, their projects tend to add up to $10, $12, $15,000 worth of work. So it's not nothing. But looking at just a single month on a spreadsheet, you might think, was that really worth my time? And over the course of a year, it becomes clear, like, yeah, it is. And then vice versa, though, to be able to say, ooh, this was, this client is 80% of my work. That's to me very scary. I don't want all my eggs, or that many eggs in 80% of them in one basket, if you will, in one client's basket. So kind of motivating you, being able to see, oh, maybe it's time to start pitching again and get some fresh clients in here. I'm relying too much on one or two clients. But also, are they 80% of your work or your income? Are they also 80% of your energy, though? Or are they less of a percentage of your energy? Or are they 100% of your energy, and then your other client's getting the short end of the stick? So you can better see with each client kind of what chunk of your income they are, and then better manage your pitching from there and your outreach to new clients. Or maybe you see a client, oh yeah, I did work with them for the first quarter of the year. It's now Q3 and I haven't heard from them all second quarter. Let me reach out to them and send an idea to get work with them again. I loved working with them. Let me do that. So taking all of these things into consideration, not just looking at your numbers, but looking at how that informs your entire business strategy, really, of who you're working with uh, and who you want to be working with.
Yeah, I think that the percentage of your income per client is a really important thing that I think very few people actually take the time to break down. And it's not difficult if you look at your how much you made in a month and you look at how much you made from that client. It's just a matter of dividing to find out what that
Mm-hmm.
percentage is. It's really not difficult. For you, Kate, is there, and I don't really think there would be a perfect magic number, but is there a number that you aim for or that you're uncomfortable with having one client contribute to a percentage of your like, if you're like, ooh, 80, like you were saying, 80% of my
Yeah.
income coming from one client is just too much. Is there one, like, is there a threshold where you're a little bit uncomfortable once it passes?
That's a really great question. I think honestly, past 50% for me becomes like, okay, let's look at this. Um, Again, I think my threshold has probably changed as my income has grown. So, for example, if when I was first starting out, if it was like I was going to make $70,000 or $80,000 in a year, right? And so over 50%, if they're 40%, let's go with $80,000, 40,000 is from one client, that starts to feel a little ugh for me because I know if I lost that client or anything happened, I'm down to 40,000 and that feels like okay, we can work with that. I can start pitching again, but that's a significant ugh versus making 120, 130, $140,000 if 50% goes away. Okay, that's still really great salary to have 75,000 or whatever it is, 70,000, yeah, 75
Mm-hmm.
um in going, and okay, that's easy then to bridge that gap
Mm-hmm.
to start pitching clients again and get some more work.
Yeah.
So I would say 50% is when I would start looking to be like, okay, let's maybe start pitching again. Or is there a client I need to let go of because they're not kind of at the same level as all of my other clients in terms of how much I'm billing per project? Because I don't charge the same rates for each client. Many people don't, and that's totally fine. Again, my fun client who literally can't afford to pay me anymore, I keep them because it's fun. But there are other clients that can't afford to pay my full rate. And of course, they're at my like, I won't go lower than rate. And I recommend everyone has that. If you don't already have that, it makes it much easier to turn down projects to say, if they're going to offer lower than this number, I will not move forward with this project. It doesn't work for me. It doesn't work for my financial goals. Um, and have that number in mind ahead of time. Because otherwise, then you'll be like, oh yeah, maybe sure, I'll take this for $30 an hour or whatever it is. And then you become miserable because you're not being paid what you're worth.
Mm-hmm. Mm-hmm. That makes
So definitely have
yeah.
those numbers in mind. But yeah, 50%,
Mm-hmm.
it starts to get to 60, 75, then it's like, ooh, yeah.
Yeah. And is
I might as well be working full time at that point
yeah.
with one client.
And is that a ratio that you examine on a monthly basis, or is that more of the quarterly basis?
That's especially depending on your client mix and how, ongoing clients you've worked with. Obviously, if you're just starting out and this is your first month, I wouldn't look at it at your first month and start to like make drastic decisions because it's harder to see a full financial picture without a little bit more time and a little bit more data. I don't think 1 month you can see too much. So I would say on more of a quarterly basis, in the sense that though, if I'm looking at the beginning of January, maybe I'm looking back at my Q4 and seeing, does that kind of match up with the rest of the year? Was that an outlier? Kind of what's going on? So looking at the number from a few different angles to really get that picture. But yeah, I would say more on a quarterly basis to weigh the client breakdown and how things are shaking out
Mm-hmm.
versus a month to month.
That makes sense. And then you were very good about, which I have certainly gotten better, um, contributing to retirement accounts.
Yes.
And I know you have those set up to contribute automatically.
Yep.
When do you?
Actually, it's not
Oh,
automatically.
it's not.
No.
Tell me more.
So these, because I'm confident now, and I know I'm going to make a certain level of income each year from my freelance work. Obviously, that's changed as I come on full time with Nicki Media, and but thinking to full-time freelance in particular, I knew I was going to be able to max out my retirement contributions. So at the very beginning of the year, I would I shouldn't say very beginning. So I think that the limit is now 20,500. I would dump that as soon as possible for my employee contribution.
Mm-hmm.
The employer contribution is based on taxes, so I would always wait till after I'd done my taxes, taken all the deductions, blah, 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 and saw like the max number I could contribute as the employer side, because again, if you're single, an entity, just yourself, whether sole proprietor, even if you're an LLC running by yourself, you are taxed the same way as a sole proprietor. Don't quote me on all of this. Look it up. We are not financial experts, but I can link to the IRS, at least for the Americans. That is the case. And so, but you can contribute to a self 401k as both the employee and the employer. So I do my employee contribution almost as soon as possible, because I know, okay, I've hit 20,500. Great. I can dump all of that money literally. Then it's just essentially saying I've made nothing because I've contributed that much.
Do you keep that in a separate account? Or do you just keep
that
it in
money,
your business account? Yeah,
I just keep it in the business account, and then as soon as I hit that, want to contribute it to the retirement, I contribute it to the retirement. Okay. But yeah, I know I have that on my radar, if you will, for the first like February, March. Honestly, it's usually around tax time when I'm doing my taxes for the year before. I'm contributing my employer contribution, and then the employee for the current year, if that makes sense.
Yeah. It does. But if you're listening and it doesn't make sense, there are all kinds of resources out there that to dig into. And if any of this too, you can also spend a little time, pay to spend an hour with an accountant, and they can walk you through everything. Yeah.
Yeah. And I will say, I think set it aside in a separate account if you are serious about contributing to your retirement and you don't feel like you're going to have that lump sum. I've been, I shouldn't say lucky because I'm not. It's been very intentional in that I've just saved a lot of money so that I can do that in a lump sum and just get it done at the beginning of the year. It has more time to compound interest, all that good stuff. The market's down, yes, but it's fine. It's just going to be in there. We're going to ride it out.
Yeah. Well, and I think because we recommend having a separate account for your tax money as the money comes in, set it aside into a separate account for your taxes. So it's either less tempting to dig into that tax money, or just you don't realize if you're like, oh yeah, I have 40 grand in here for my taxes. And then oops, you accidentally spent some of it, not even meaning to. So it's, if you understand and on top of your finances regularly the way that Kate is, you could keep it all together. I think probably knowing myself,
separate it.
I would probably separate. And there's so many, especially online banking, where you can have multiple separate checking accounts. You can have your main business account, and then as soon as something goes, you can transfer money to your taxes, and then transfer money to your to be invested account.
Yeah. And honestly, I should speak from a place of what I would do if I wasn't, I know I'm going to do a lump sum and I'm going to max out my contribution. That's my goal. I want to max it out. And so I'm going to do that. For many people, I feel like what makes sense is I'm going to do a percentage of my income each month or whatever it is. Say you want to invest 10% into your retirement account. And so taking what that 10% number is each month, okay, here's what I actually made. I'm going to take 10% of that, put it in my retirement account to invest. And maybe you do automate that. Honestly, I mean, that's the only reason I don't is because, again, I'm doing just all at once, the lump sum, which I want to make sure I've made that money before I invest it as a business. So then the IRS isn't like, well, you invested $20,000 in your retirement, but you made 10. How is that?
Don't worry about it, government. Yeah.
How are you doing that?
They will worry about it. Yeah.
Calculate, and I would do that beforehand. And some of as you're looking at revenue from last year, but also looking at your revenue goals for this year, thinking about what are okay, here's what I need to set aside in taxes, but what are my financial goals beyond what I'm making? What are my long term? Do I want to start saving in a retirement account? What does that look like? What percentage feels good to me, for me, in my goals? And again, do that math of, okay, if it was, play around with it. You don't have to what's 5%? What does that equal? If roughly your income each month is a certain amount, here's what 5% is. Here's what 7% is. If I bump it up to 10, if I bump it up to 12, what are those numbers and what does that look like over the course of the year? And frankly, it hurts a lot less to do it on a percentage on a monthly basis than to do just all at once. Like, ugh.
Well, and so those are questions that you ask on a yearly basis, probably right around this time, right around the new
Exactly.
year.
Yep.
What other questions financially are you asking yourself, or are you evaluating at this time of year?
Yeah, at the beginning of the year, I think it's helpful to set that revenue goal for the year. I always look back to see, what did I make last year? What were my expenses last year? Okay, what did I truly take in? And so then, okay, looking ahead this year, does it make sense based on whatever's going on in your life? Things might change. Maybe you go from full-time to part-time, or really, really part-time, or whatever it is. So not feeling like, okay, I made this full time, and so now I'm going to make this working 2 hours a week. Maybe if you feel like you have a plan for that, but also setting it so that you don't feel discouraged if you want to reach, you want to have that financial goal and make it, and maybe you adjust that goal halfway through the year. That is something I would look at to see, is this still feeling right based on everything that's going on in life? A lot can happen in a quarter, in a 6 months, and certainly obviously beyond that. So yeah, I set up, okay, what do I kind of want to aim for this year? What does that mean? How many projects roughly does that mean each month? Do I need more clients to hit this number? Do I need about the same amount of clients? Am I adjusting my rates? We'll link to that episode as well that we recorded. Obviously, if you're doing it on a project basis, much easier to kind of just factor in some rate increases and not have to announce that per se. Obviously, if you're hourly, you want to give your client a little bit of a heads up that you're doing that. But yeah, looking at what I'm charging, and does it still feel accurate for the value I'm adding and the value I'm bringing to clients. And the other big thing I'm looking at is, are there any big expenses I have coming up this year? So for example, last year I knew I wanted to take a trip to Italy, which I was just looking at. CCA students know the Right Start workbook, which I did fill out, and I was looking back just now from 2022, what year is it? 2021's, I guess then. Yeah, it's 2021, looking at 2022, and I had my Italy goal in there. So I knew that was coming up. So same thing for this year. Okay, what are there big things that I want to maybe make a little extra for, or like hit a slightly higher revenue goal to cover these expenses? And just be prepared for? Or am I going to contribute less to retirement one month because I really, really, really want to go on a trip? That's not how I do retirements first. I would love to retire real early, folks. That's my goal. And then just thinking about my revenue goals in general, of, are they really based on what I want, or is this a comparison number? Is this me saying, well, even comparison with past self? That was folks who listened to my episode where I shared some of my salary numbers from when I was full-time freelance. Setting a freelance income goal now that I'm not full-time freelance is definitely a little bit trickier, knowing that, like, I'm not going to make that same amount that I was making full-time. I'm just not, and that's okay. And so not comparing with myself and my past self, and also even when I hit that number, to know, like, I'm not going to set a revenue goal that's even higher, because I knew how hard I worked. So it was like, actually, let's hit a goal that's $10,000 or $20,000 less, and I'm still going to be perfectly happy and fine with, like, just a little less chaos going on. And so not comparing with myself, not comparing with other people as well, to say, oh, that person's, I think, we don't even know what other people are making. They project what they might be making, but that's not actually, and so that's not helpful in goal setting. So looking internally as much as possible to say, what do I really want? And more of, what do I want, and how are the financial numbers going to support that goal? Because finances are a tool. They're not necessarily hitting great, I made $1 million. Like, cool. If you don't have anything you want to do with that, then what good's that $1 million?
Yeah. That's a great point. Yeah. And I do want to mention before we go, the Right Start workbook and the Right Start the Right Start event, which was really just kind of a kickoff on how to fill out the workbook. All of CCA students get it. You will find it in your dashboard. If you are not yet a CCA student, you can still hop into the course and get access to the workbook and still set your 2023 up to be successful. It's
At any point in the year, really. Even if you just come July, August, it's still so many months in the year to.
Exactly. And these are important goals. And we talk in that workbook, we talk about financial goals, yes, but all kinds of other goals as well, lifestyle goals and all kinds of stuff. So I don't want to forget to mention that. But Kate, this has been super duper helpful. This is one of those episodes that I think people are going to be like, "Ooh, I need to re-listen again and take notes." And then
I didn't expect to be interviewed, but well done.
Thank you. Yeah, but learn from you. I'm a terrible interviewer. I've learned a lot from you. But thank you. This was really, really helpful.
Yeah,
and
it was helpful.
Actually, I have some notes of things that I need to go back and add to my tracking sheet. So thank you. And with that, everyone, we'll catch you in the next episode. Bye, everybody. Like what you heard? Hit subscribe so you never miss a video. And if you're ready to take the first step toward becoming a copywriter yourself, sign up for a free video training right here.